Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer at Wells Shield, an outsourced CIO and investment research company. We got Evan Cohen, co-founder and Chief Operating Officer of WithVincent.com. It's a media company focused on alternative investments. And, of course, Nick Fusco, CEO of 8View, is a pre-IPO secondary market pricing company. Okay, fellas, look, Google making a big acquisition, or at least they're trying to buy Wiz for $23 billion. So Wiz is an Israeli cybersecurity cloud computing biz. They're headquartered in New York, but obviously have offices in Israel as well. So the acquisition, I think the goal for Google is to cross-sell. They do, Wiz does cloud computing, cybersecurity. So I think they can cross-sell to Google Cloud to folks that are using Amazon or Microsoft, right? For example. So this is the biggest acquisition they've ever made. I think the other large one was LinkedIn, right? If I'm not mistaken. Microsoft bought LinkedIn, but I think it was maybe YouTube, right? They haven't made a lot of acquisitions, these guys, but the last round for Wiz just happened. It was May of 2024, $12 billion. So this is a big jump from 12 to 23. Inside Partners and Sequoia were kind of the earlier investors. So maybe we'll start with you, Clint. What do you think? Google buying these guys, obviously the cross sell is interesting, but I think probably what's more intriguing to me is a company founded in 2020 and now it's being sold for $23 billion, 4.5 years later. That's I think a positive sign. It's good for liquidity, venture capital funds get access, right? What do you think? Is this a good sign? Maybe other companies could be looking at this, or is this kind of unique perhaps for just cybersecurity businesses?
No, I think this is great for cybersecurity businesses primarily. I think that industry has been a darling of VC for a while. A lot of key investments in the space, and you haven't heard a ton of buzz around them. They've been great performers, but I think as AI, as data, as compute gets extremely, extremely important, as it is now, but obviously with AI is kind of fast forwarding everything from a need perspective. I think cybersecurity is critical for these firms, these platforms to be vertically integrated. And I think this is I think it's a smart acquisition by Google to vertically integrate their cloud business, cybersecurity, AI, because when you think about B2B and enterprise sales, it's very important that you kind of have everything in place. So I like the acquisition. I think I'm generally bullish on cybersecurity companies, more so now with AI than before. And so I think this is a really good strategic acquisition, in my opinion. The jump, I think the jump in valuation, 100% jump in 2 months, I think is suggestive that, maybe investors aren't valuing these cybersecurity businesses the way they should be valued within the scope of a broader platform. And it reminds me of the time before, software as a service got properly valued. You didn't see, that's when you started to get those big leaps in multiple. And I think maybe Google has a way of valuing this business from a growth perspective. It makes a lot of sense. And so I think that would be where I'm interested if this deal finalizes, is really digging deep into that, figuring out how did they arrive at 100% jump from the last round.
Yeah, that's fair. Well, Sync is another good kind of pre-IPO stock that's in the cybersecurity space too. So if this does code through, it'd be interesting to see what happens with Sync and kind of the secondary too, right? But Evan, this is DPI, man, right? So for VC fund, everybody's been dying for liquidity. This one's going to come through. That's good. I would think some of this would end up back in LP's hands, which hopefully gets recycled back into the VC ecosystem, right? What do you think?
Absolutely. Absolutely. Well, look, just obviously this deal is not fully announced or approved or signed off yet. And there were rumors earlier in the year that Google was going to make a large buy in the M&A space by buying HubSpot. And it sounds like that deal has cooled. So before we all get super excited that this deal is going to close, obviously nothing is official yet. So we don't want to get too excited, but it is, to Clint's point, it's really an interesting opportunity, especially in the cybersecurity space. And, as a shareholder of Sneak, I'm very happy about that. I think that it does bolster the overall cybersecurity ecosystem, and it's a good representation of there's continued interest in the space. I do feel it's a very, very expensive leap, and Google has made a couple of acquisitions, but never to the size of this. They bought I mean, they bought Waze, which is another Israeli company, more than a decade ago. That's like the darling from Israel that I know they manage. They also obviously have YouTube. And I think the largest acquisition, or the most recent acquisition they did, was the funnel conversion product. I cannot remember the name of it right now. But so they haven't made a bunch of splashy acquisitions like this. So I think it's good for them. It is a good play for their cloud space. I think it's very interesting that Wiz operates across all the different cloud providers, and that's interesting because it allows Google to get revenue from customers that will be using AWS or Azure, which both businesses are continuing to be bellwethers for those competitors. So it's a really good strategic acquisition for Google if they're trying to generate revenue off of their competitors. But I do wonder if the price is very steep, considering that they were just valued at half this valuation not even 4 months ago.
Yeah.
So it's an interesting play for sure. Google has endless amounts of money and the most profitable business model ever created. So I think that they can probably afford to do it. And it sounds like these founders are excellent. So it sounds like a good acquisition overall, but nothing is official till it's official.
Yeah. I mean, so Nick, I didn't look at 8View earlier today, right? But I mean, Wiz, from what I remember, I added Wiz to my research coverage, right? Because I was starting to see liquidity in the secondary market, right? Of course, using 8View data and talking with brokers. But
we appreciate that.
Yeah. I mean, what do you think? Like, what do you see? What are you guys seeing? Anything like unique insights, I suppose, in the secondary market kind of coming through the data?
Sure. Secondary market. I think it was March when they did the E1 round. Is that right?
Yeah.
So
ballpark. Yep. Right there.
We're up about 10% off of that in the 3 months to follow that round. And then if you look at the most recent data, there was a ton of buy pressure. So it's 90+% buy pressure on it right now. So hopefully that's a positive sign that got reflected out. But I think that's super interesting in and of itself. I mean, if someone's taking that into account on how fast this company's growing, I think Wiz claimed the title of the fastest growing company from 1 to 100 million ARR. You're going to have to pay a premium on it, and it's not just the typical secondary market premium if you're taking out the entire company.
Fair enough.
I don't think there were any chances being taken here by Google, right? And it's interesting that you both brought up Sneak. I mean, Sneak is looking relatively beleaguered by comparison. The share price we were looking at 2 years ago, 16, and now they're down about 60%, down around 6. So really curious if this is going to start pushing up competition for the cybersecurity space, which it should. I mean, you just saw the leak from AT&T news out today or yesterday.
Snowflake.
Yeah, every cellular or wireless customer account got hacked in some way, shape, or form, or something like that. You're going to need to value these companies in a very serious way because they're integral to day-to-day life. This is everything is online right now, and even if we take it to the next level of state intervention from external hackers or state-sponsored hacking, we should all be investing more into this space, not less. I think on a go-forward basis.
Aaron, just to add a note there. So the last acquisition Google did was for Looker, which was $2.6 billion, and that was also added to their cloud product. So we're starting to see Google realize that the commoditized space around cloud, in order to compete, they need to add more features and they get to product parity. And so it seems like their M&A strategy of trying to add different product features on top of what they already have is probably the best way to acquire new customers and keep existing customers.
Yeah. I mean, cybersecurity is going to be high. I think what Clint said, like AI is hitting the scene now, so everybody's going to have eyes on this, right? And nobody's safe. If AT&T can't do it, right? Nobody's safe. You got to be dialed in on this stuff. So, okay. So BlackRock, guys, buys Preqin. That's a big one, right? So $3.22 billion cash. So good for the Preqin folks. I know that business has been around for like 20 plus years, but I'm very happy for those folks that have equity ownership there. So BlackRock wants to buy them because they want to create alternative focused indexes and passive funds, which is unique because yours truly here. It's hard to do a liquid assets and a fund structure. But here's a quote from Larry Fink, who's the CEO of BlackRock. We believe that we could index private markets. We anticipate indexes and data will be important future drivers of the democratization of all alternatives, and this acquisition is the unlock. It's a pretty bold statement. So Nick, you're you're our private markets data guy, right, bud? So like, what do you think? What do you think of this acquisition? Is this a good move? Is it, do you think Preqin's got an interesting data set? Like, what are your thoughts?
Yeah, I mean, as one of the leading fund monitoring and analytics services out there, super interesting to see it go the way of BlackRock. I mean, you got to understand that every major data vendor out there was probably willing to bid on that,
Yeah.
and for it to land with a BlackRock, complementing what they'll do with Aladdin, maybe the tie-up of what they're going to do with Citadel down in Texas
Yeah.
for the future, right? I mean, all of this is really long, forward-thinking strategy for them, and I think it was a bold acquisition and almost a bold statement with the $3.2 billion price tag.
Right.
So super interesting, and also love their cap table was pretty much the founders and the employees. There really wasn't a lot of external
Yeah. That's
capital going
awesome.
into that. So when you say congratulations, in this case, it means a lot more.
Yeah,
So
sure.
really,
I
really
love that,
brilliant.
man.
Yeah.
I'm glad. I'm so happy for those folks. But Clint, like as an allocator, right? What do you think about this statement of, kind of putting private markets in funds? Do you think he's and like kind of indexing private markets? Is that interesting to you, or do you kind of like picking managers? What do you think?
If I was the
Heavy
ETF
sigh.
company,
Love it.
if I was the ETF manager, I'd be happy about it. Look, I think this gets rid of the illiquidity premium, and what it becomes is a replication strategy. Just like we've seen very successful launches with replication strategies, primarily in the hedge fund space and in future space. Big names
Mm-hmm.
coming out, launching these products, getting a lot of assets in the products, but it in my opinion, it's a skinny down version of what an investor really needs in this space for diversification. I think it's coming at a time where, and I'm not going to pick on BlackRock, but there is a upward momentum in private market assets because of valuations, et cetera. We've been in a long run in public markets. I think people woke up to the lack of diversification in their portfolio in 2022 on the back of the Fed raising interest rates. I think we've got a lot of big trends that are causing asymmetric opportunities in assets. I think you've had the entrance of new asset markets like carbon markets as well as crypto. So I think alternatives are incredibly compelling, and I think the data is pretty clear that area is growing leaps and bounds above other areas. And I think this is
Yeah.
BlackRock's mechanism for an asset grab. But I think the reason these private markets are so compelling to someone like me is because you lock up investor capital. So you get the illiquidity premium. You help them help themselves by not making rash decisions at the wrong time. And what happens here is a liquidity mismatch. So yes, you're going to create these synthetic products that tie to an index that's tracking private markets, but ultimately all you're doing is giving retail investors a bunch of liquidity in an area that shouldn't have liquidity, where the absence of that liquidity is what is the primary source of their return. So that's my main issue. But it'll be interesting to see what products they launch. I was going to say you're safe, Aaron, but I think venture capital is probably one of the indexes they'll try to grab.
For sure.
So yeah, it's going to be, and that's an area you could actually have liquidity for a good portion as companies go public, right? You just keep them in the portfolio. But nevertheless, I'm not a fan, but I think it's happening. This is democratization of asset management. I think this is going to appeal to a lower asset level for investors, to call it the mass affluent. I think high net worth, ultra high net worth going to still want, and institutions are going to still want structures where they actually own the underlying private assets. So
Agreed. Yeah.
That's where I think this is.
Yeah. So Evan, I think like that kind of resonates with what Clint's saying to me, right? But what's kind of compelling about this is to really do, like, if you wanted to quote unquote unlock alternative markets for your everyday investor, you need some kind of rule changes with the SEC around public funds, and specifically around illiquidity. But BlackRock was the one that just got the Bitcoin ETF over the line with the SEC, right? So they're dialed in over there. If anybody could do it, BlackRock can, right? So I mean, what do you think? Do you agree with that, or what do you think about kind of changing structures of markets, perhaps with the SEC, in partnering with a firm like BlackRock?
I think that I have so many interesting thoughts, and what Nick and what Clint said, I agree with both of what they said. There's the element of adding data to this market. I mean, look, private markets have historically been opaque. The opaqueness is the investor's advantage. The illiquidity, I think that a lot of people think that liquidity is a great feature, but I think it's actually not. I think it's much better when there's illiquidity, because oftentimes, especially retail investors, but most investors don't have the cojones to hold onto these assets as long as they should. Sometimes we can sell early, and it creates problems in these markets, which I know, Aaron, I know you believe that the market dynamics are always honest, but at the same time, when you have private markets that are not totally public, it does create some mismatches, and it can hurt an asset or it can hurt a company. Look, BlackRock has been around for many years. They're professionals in this space. Preqin, and I think it's an excellent acquisition, but I give them a lot of credit because they have built a lot of investor trust around their brand. It took 20 years to do. This is not an overnight success. This is not a company that came out of nowhere. They have built years and years and years of reports and track records to gain investor trust, which I think is what BlackRock is acquiring. But I also believe that, and I've looked at a lot of Preqin reports and looked at the data and been like, is this data really that accurate? How are they getting this data? And, to some extent, private markets and the data is opaque for a reason. Just because someone does an analysis doesn't make it accurate. And so I guess from my perspective, I think that there's this long tail of democratization of alternative assets going mainstream. I think that's what people want. I don't necessarily think that's great for the market, because I think that at the end of the day, as more people get into the market, it creates more challenges around liquidity. It creates more challenges around diversification. It creates more, as more demand for alternative assets come to market, more supply will enter the market to meet that demand, but that doesn't mean that supply is good. And what will ultimately end up happening is that you'll have, bad assets that are sold to investors, and investors will lose money, and it'll create distrust around the market. So, look, I think there's again lots of thoughts. This is just me sort of spewing my thinking around it. I'm really impressed with the acquisition. I do think it's great for BlackRock because it gives them the ability to tell the narrative to investment advisors who historically have wanted to allocate their customers to alternative assets, but have never had the confidence to do it because there isn't a great data set to trust. There isn't a great index to follow. And it's really hard to justify it to your client that you want to put them in this illiquid asset with not a lot of historical research available to it. And this makes it a lot easier for them to do that. So it will expand the market, and there's a lot of positive to it. But with pros come cons, and you just kind of have to look at the long run of it and see how it's going to go. I also think it's great for Nick because his data is awesome, and it's a great validation for what they're doing. And I also think it's great for you, Aaron, because your index has been awesome to follow as an alternative investor, and I think it just validates what both of you guys are doing.
Yeah, I mean, I'm trying to convince Nick to let me invest, right? And I think now his valuation might have just gone up with this Preqin acquisition. So maybe
his mark's gonna be pretty.
Yeah, man. I think I missed it. I got to get on there. Got to get on him. So
it could be a really interesting thing to see who's going to want to fill the gap for Preqin data, right? Now a number of the other bidders, let's say, the vendors predominantly, may not want to be in the same relationship, or BlackRock may not allow them to be in the same data and partnership relationship once it rolls across.
Yeah.
So there's got to be a replacement out there, a few different types of replacement packages that are really important. And yeah, absolutely, we have our antenna up.
Sure.
We got to know what's going to be required in there. But this is huge, and I think, Evan, you hit a good point. This is definitely good for BlackRock. Is it good for the market? I don't know. I think there's going to be a big supply demand disconnect because there are only so many shares of all these major private companies that we're all tracking and all have our eyes on. And you're probably right. That's going to perpetuate a flow of second and third tier companies that are like, oh, here's some money, new money's here. Let's hop in.
Well, Nick,
Let's create.
can I ask you a question, Nick? So here's the thing about alternative data that's different than the public markets is that at the end of the day, there isn't a centralized, required, verified source where you can get all of this. So sometimes the data is pieced together from private information, public information, and assumed information. Now, by BlackRock acquiring Preqin, is there a conflict of interest in which BlackRock might want to use Preqin as a mechanism for telling a narrative around a product it's trying to launch? We've never really, you've seen this before with media companies and investment advisors or investment products coming together. Is there potential?
That was not Nick. Go ahead, man. Fire away.
No, Evan's getting me fired up with that question, so I'm just barking back. I think a company the size of BlackRock will be so delicate with conflicts of interest that it could be figured out. But in terms of the narrative, it's very interesting because you have so many different funds that are reporting through Preqin that are actually reporting different numbers on the same assets over the same time period. So
Exactly.
like you said, I mean, the data is only as good as who you trust to report it. And I think you really do need a mechanism like an external third party that can give you the normalization process of that. And I don't know if BlackRock's going to be in a position to want to normalize that information or how it's going to go. But they also bought a pretty massive Rolodex of all the players that weren't in the public market that are focused on privates to get themselves involved here and almost bought out a huge relay of relationships. So yeah, I think they'll figure it out. They're not going to do anything that's not above board. Uh, but figuring out and controlling that narrative, you can paint history in a number of ways with the data that they have. Yeah.
Yeah. All right, fellas. Last topic. Let's talk AGI. So OpenAI just came out and kind of laid out their framework and kind of definition of what AGI is, which I think is like so smart because they set the definition. So obviously they're going to set a definition that's easy for them to get to it, right? I mean, I would think that would be the case. So in summary, basically they're like, there's 5 levels. They say they're currently at level 1. It sounds like ChatGPT 5, which is the next model coming out, is going to be like level 2. I actually went to ChatGPT and asked what level 5 was, like more a detailed explanation. It's called organization is level 5. But basically the way that I understand that is that it's like you ask the AI to do something and it's like the CEO of the company and on the ground working. So they just like the AI just takes off and like builds you a business or does X for you and it could just run itself, right? Pretty incredible. So what are your thoughts? Like maybe Clint, we can start with you. Like, what are your thoughts on these guys laying out this kind of definition of AGI? Do you think that it somehow, I mean, they must have a line of sight to how to get there, right? If they're coming out and saying this, but it has to.
Yeah. I mean, I think it's their internal milestones, right? And sorry about my coworkers, guys. They get a little rowdy occasionally, but yeah, I think ultimately this is just about their internal milestones that they're publishing, right? Not giving a ton of information as to what do those need or revealing any secrets, but they're saying, hey, this is what we're going to target. Here's some clarity as to what we're building. There's been a lot of scrutiny about the potential for AI to go crazy. And so putting some guardrails out there, some milestones, some definitions, some clarity, I think is a smart move from a firm perspective. And I think it was needed. That way you have a framework for making decisions. You have a strategy. It doesn't seem like, hey, we're just going in there, we're building and we're going to allow this thing to just go where it goes. That provides a lot of uncertainty to the marketplace. And there's a lot of people that use that to instill fear in others because of, for whatever reason, They got a competitive product. This is very smart just to say, hey guys, this whole concept of general AI in a sense isn't that scary. And I think that's helpful. And then hopefully we'll start to see some timelines as to reaching each of these milestones. I think that'd be a next important step to providing clarity and communication to the marketplace.
Yeah. So Nick, having this laid out now, these steps laid out now, I would think that we're going to start to see the valuation of like, maybe first of all, like defining, there's a lot of different definitions of AGI that's been floating out there. And I don't think anyone's really pegged it down. Like to me, they just did that, or at least this is their opinion of what it is. And OpenAI is an industry leader. I think a lot of people will gravitate towards that. Is that fair? Like if they hit level 5, I think they're kind of saying that's AGI, right? Which a lot of people have had different definitions about what exactly that means. What are your thoughts there?
Sure. And I would kind of compare it to, there are 5 levels of autonomous driving, right? So level 1 is there's one thing that the car does that's autonomous, like braking. And level 2 is there are 2 things. But I feel like, I mean, we'll put this up in the caption. of what the levels actually are. But they seem relatively open-ended, or maybe I just need to dig into the prescriptiveness. But when you're going to level 2 and it's reasoning, human level problem solving, things of that nature, OpenAI would maybe do that human level problem solving differently, right? We saw that demo of assisting the kid with his homework.
Right.
Then let's say inflection AI that is going to help you with your feelings, or how to look at a situation with another adult, right?
Right.
So
Yeah.
they're both reasoning, but there's IQ and there's EQ, and I think not having this incredibly prescriptive makes a lot of sense, and I love the fact that they just put some leveling to it, because now in our brains it's like, oh, this is kind of like autonomous driving, and because it's
Right.
the exact same number of levels. So
Yeah.
I think I'm not immediately jumping to Terminator when I think of this now.
Yeah.
It's a little bit more approachable. Yeah.
I
Yeah.
think
I
that
got
was
you. So,
intentional too, if you think about it, because
Oh
like
yeah.
you're taking nonlinear dynamics and nonlinear mathematics, which is the backbone of AI, and you're making it linear for the populace, right? So I think it was very
yeah. Sure.
intentional.
Yeah,
Yeah.
it's easy to understand now. So Evan, I mean, OpenAI is like $100 billion company ish, right? Depending on the day. But I mean, I would have to think as they start to release models and then claim victory over these subsequent levels, that we would start to see some kind of like uptick in valuation on each of these, right? I mean, what do you agree with that? Like, what are your thoughts there around the valuation? I think we might have lost Evan there.
Yeah, I
What
see
do
his
you guys
feet,
think,
his
Nick?
feet cut up.
Yeah, yeah, Nick or Nick, Clint. What do you guys think? Go ahead, guys. What do you guys think? What do you guys think? Do you think we'll see a valuation pop as this kind of goes up to these subsequent levels?
I think this is a great way for them to set these milestones for the marketplace, kind of like what Elon does with capital raising, right? This is saying, hey, if we hit this milestone in short order, right, in a short time frame, or ahead of where we said we'd hit it, it kind of conditions the marketplace to start to reward other metrics, internally driven metrics versus user growth or whatever, right? I think ultimately it's shifting what becomes the focus for analysts from a valuation perspective. I think that's very important right now as you're trying to figure out what the ultimate business model is going to be.
Yeah.
I think you have to do something like this, because
Right.
an open-ended, what's the business model going to look like, is going to subject them to a lot of potential for error, in my opinion. So I think you could see that absolutely. And Evan's back. Sorry, Evan.
Yeah. Go ahead, Evan. What do you
No,
think?
sorry about that.
Oh.
I didn't hear your
Yeah,
question.
sure.
Can you
So
repeat
do
it,
you
please?
think now that these levels have kind of been defined, do you think that we'll see OpenAI's valuation go up as they kind of accomplish these subsequent levels?
I think that they're certainly playing the narrative of that's the case. Look, $100 billion valuation company, it's already a very impressive large organization with a lot of potential. But if they get to level 5, they're effectively saying that they could run hundreds or thousands of businesses, which could make their market cap arguably endless. So it certainly paints the narrative that there's a much bigger opportunity here that they're going to be going after. I'm personally, like, I look at level 4 and I think of as an entrepreneur myself being like, the last thing I want to do is compete against an AI innovator, because I consider myself pretty creative, and I have pretty creative friends like yourselves, but I don't think that I can think and compete at the level of an AI. So that certainly makes me nervous as an entrepreneur.
Yeah. But Nick, what do you think about? I mean, I love this. I'm thinking to myself, like, man,
Just
I'm just gonna
nerding
have a whole
out,
bunch.
right?
Yeah, I'm like, agents are coming. Like, if ChatGPT 5 is level 2, then once like level 6 is 3, I guess, right? I don't know. I'm just throwing this out. So if we're at a 3 and that's like next year, man, I'm gonna have like 25 employees, right?
That's when you have a one man or woman, one person. You have a
Aaron's
one-person billion-dollar company.
right?
Yeah,
Yeah.
it's incredible. We'll see it at that agent level.
I mean, I don't know. I'm not saying I'm going to be a $1 billion company, fellas, but I'm going to love the idea of just having these agents, just like ripping these agents.
Well, think about it. You got your HR agent, you got your finance agent, you got your legal agent. It's brilliant.
What's the headcount at Inflection AI right now? I think it's still sub 30.
Yeah.
Right?
Yeah.
There you go. That's a nice example. Yeah, and this is just another KPI that we can put on the list. So we'll definitely want to measure how fast we can get to level 2, level 3, level 4.
Yeah.
But this is also like clinical trials for drugs, right? I mean, once you hit um, each of these thresholds, it's going to get reflected as to, okay, how was it approved? How did it test? How did it fare?
Right.
So no, this is beneficial because it's uncharted territory, and you're not going to judge headcount growth at an AI company the same way you're going to manage headcount growth at a manufacturing company, right? So we need
Right.
some stuff like this. I think
Well,
these are good
it's
frameworks.
the last thing I'd offer with this. You're already seeing some businesses, and a lot of them are tech businesses, where they're effectively like not hiring new employees after people leave because the AI is already adding efficiency to teams, right? I think as these subsequent levels get accomplished, it's even more. I think it even more. I don't know if companies are going to come out and like just let people go, whole teams of people go, right? But certainly headcount's going to get smaller across companies in the S&P 500, right? So this is
Yeah,
going to be a massive earnings unlock, I think,
I
for
think you're
all
right.
businesses.
And some of those metrics, I mean, investors are going to look at headcounts all the time,
Yeah.
right? So I mean, I remember there was a lot of chatter on the Preqin acquisition about Preqin increasing the sales figures and laying off dev or dev leaving or something like this. I'm like, yeah, you know what though? Everything is transformational right now.
That's right.
Everything, people, you could actually have companies going down in headcount quite significant repeatedly, and they're just going to be the ones outperforming because they're just utilizing technology better than the next,
Yeah.
rather than
AI is the
yeah.
most deflationary force in our history
Right.
by far.
Yeah.
Like it's so deflationary, it's unbelievable when you really start to think about it. And if you go down, I mean, at this point, UBI is going to be in our future faster than I think any of us
Oh yeah.
realize.
5 years.
By the time you hit this agent thing, right, if you think about that, where you have fully operating systems of systems,
Yeah.
it's over. You've got you're every low tech business. You raise money, you buy low tech businesses, you scale it with AI, you cut headcount. Data becomes infinitely more valuable. You usher in UBI tied to a data source or tied to a personal data. It's over. Like this is
But this is
an
it's over.
incredible.
Sounds like perhaps
Not bad, not bad, not bad.
Right.
It's just
good.
everything is
Clint?
changing. This is going to increase our standard of living exponentially, and that's hard to
100%.
fathom. And but it's
public
just not going to
market
look like
investors-
what it used to. It's not going to look
Yes,
like
yes.
what it used to, where you earn
I-
your living. It's just going to be
Agreed.
it's going to be different.
We
Go ahead,
need
Nick, go ahead.
Yang Gang 2024. Bring them back.
Hey, you might as well quit the 2024 debate after there's an American flag flying over, an ex-president getting shot on stage, Secret Service ducking down, holding his fist up. It's over. Remember Reagan after the assassination attempt? The whole country supported Reagan,
red.
except for I think
Yeah.
Michigan. So yeah, it's over. We might as well start
Yeah.
talking about 2028.
Listen, it's so interesting to me. I've been in wealth management and asset management for a long time. You know, folks allocate to equities and they have like a 10-year plus investment horizon, right? I mean, if you're a public market investor right now, this stuff like Clint's talking about, I mean, all of this is going to flow down to earnings. And I think a lot of businesses, I mean, OpenAI is working with 92% of the Fortune 500. So they're all starting to implement this. And these subsequent kind of levels will start to get integrated fast, right? I think the initial onboarding might take some time, but then as these, I'll call it capabilities roll out, they'll start to get integrated. And the ROI, guys, I think the ROI will get really clear. How many people on that team? Oh, okay. How much does that cost? Well, if we had the AI do that for 50% of the cost, like why would we not do? And like that math will start to happen a lot. And I think that's where this, like what Clint's talking about, that's just going to flow right to the bottom line consistently. We're going to have multiple years
I
of
totally
earning
agree.
unlock, right? For the markets, regardless of what's going on in the world of the economy, businesses will just be shoving this stuff through and earnings will just go through, like just expand. It's just going to be an awesome time to be an investor. That's my point. Like stocks, investing, public or private, it's going to be awesome this next 10 years. Like load up, in my opinion. You know what I mean? And I have had
Absolutely.
some talks with people where they're like, well, like I was talking with a guy this weekend, back and forth on text. They're like, well, are companies really going to do it? You know, big companies are probably not going to die. And I'm like, look, this is going to be creative destruction, just like anything else. The businesses that do it will unlock earnings and they'll grow faster. Their stock price will go up, and businesses that don't do it will lose market share because they won't have as much free capital and cash flow to invest. And like, it will just, so like if you're investing and you got stocks or CEOs that aren't adopting this stuff, I think you got to take a hard look at whether you still want to be invested in that company or not, because this is going to be a massive earnings unlock. So good.
So I totally agree. And just, I mean, I think that the key point or the key term that you said is unlocking earnings, and to what Clint said, AI being super deflationary. I guess the question I have, which not to be super negative here, is like, how much of this is unlocking growth versus unlocking efficiency? And you know, that's the question, because at the end of the day, like, I believe that you're right, Aaron. These companies will get much more profitable. Right now, they're already starting to do it. They're cutting headcount. They're being more efficient with their cash. They're becoming more profitable. But at the same time, you are the one that always champions that the market dynamics are the market dynamics, right? The market doesn't lie. And so at the end of the day, if I told you that a company could be twice as efficient with their CapEx or OpEx spend, does that mean that or even the speed that they operate, does that mean that they can get more customers? Or is the amount of customers still the number of customers they have to compete for to win in a competitive marketplace? And so I believe so I think there's a lot to think about there in terms of whether or not these AIs are deflationary, which are making companies more efficient and profitable, whether or not the entire pie is growing and more revenue is coming through and the economy is actually moving faster.
I want to jump on that one for sure. Let me jump on that. So I completely agree with that. And I actually think that you're going to see revenue, at least in the short run, during the deflationary deal, you're going to see revenue fall and EPS skyrocket for companies that adopt AI, because ultimately the pool is shrinking. We have unfavorable demographics. We have a multipolar world. You've got regime shift. So you're only going to produce, in terms of growth, commensurate with economic growth. Now, sure, there's some industry pops here and there and cyclicality, and we can get into that, industry-based. But ultimately, you're going to have revenue falling in a lot of instances and EPS going through the moon. And then that sets up for when there's other supportive tailwinds for economic growth to capture an outsized proportionate share of that growth. But ultimately, I think that's definitely the first wave. And so that's a great question, Evan. Got me excited over here.
No, I mean, look, Evan, I don't think you're 100% right. What I would offer is that this won't happen. Like, the reality of this is companies won't implement AI consistently across the board. So you'll start with these adopters, which will benefit from the expanded earnings, that will then have cash to hire more salespeople or do more advertising and go and grow and take market share. So they'll take market share. So I'm not disagreeing with you. Same amount of people, customers out there. But now it's just like, how am I going to compete? I'm living in the Stone Age. These guys are implementing AI and got agents that they're ripping out. I can't compete. I can't compete in the market with that. And then they end up buying my business. So like, I think what will happen is you'll see expanded earnings. You'll see early adopters win in the market, and they will grow inorganically through acquisition, and they'll buy people who weren't doing this. That's kind of like what Clint mentioned. Like, people will just come in and buy these legacy businesses and just tear them apart and implement AI, and they'll have massive unlock and valuation. So, I mean, this is the stuff that makes a market. This is what's great about it. It's literally like creative destruction that you learned about in college, right? I mean, I think that this is going to be a massive amount of destruction in like the next 5 to 10 years, because you're going to see CEOs be like, this AI thing's crap, and not do it. And then you're going to see other CEOs and be like, this is our future, and we're totally embracing it. And I think those CEOs are going to win, and the CEOs that don't do it are going to lose. And that could be a big company, small company thing. That could just be CEO specific thing. But this is like what makes a market. And the capital markets, like capital market countries and economies, are going to eat this up. It's going to be awesome. And it's going to be a great time to be an investor too, I think. So you're not wrong, man.
M&A banker is going to eat this up too.
Oh,
right?
yeah.
Yeah, and
Exactly.
because I think so many transactions that are going to occur are going to be like the Wiz or what's occurred with BlackRock. I mean, a lot of middle market transactions, and if you just look at GDP, I think that's where everything that Aaron's putting out there is most clear. You know, at the macro level, I think that's most clear. At the company level, there will certainly be extreme volatility. Like 3M is probably going to manage the AI evolution a little bit different than GE, which is a little bit different than all these other companies that are
definitely
50, 100 years old. But really the
companies
the
with
change in the
unions,
most
Nick,
dynamic. Oh,
companies
brutal, right?
with unions. I mean, there's going to be some major differentiation out there. You're 100% right, man.
Oh, for sure. And SaaS businesses, especially if your business model is based on seats, I think you have a real challenge because at the end of the day, the seat numbers are dropping, and they will drop continuously. And if your model is based on that, you got to figure out.
I think we're going to have. I always talk about with advisors, like, what did the S&P 500 look like 15 years ago when the iPhone came out? That's kind of like my benchmark in time of like a major technological shift. I think we're going to have, and like how different the S&P 500 is now versus then, right? In 2008, just 15 years ago. And I think we're going to have a very different cast of characters in 15 years time in like the top 100 of the S&P than we currently do today.
And I love that. And you challenged me to basically do that look back, right? And I went through the top 10 companies, not all the S&P 500, and 8 out of 10 are 50% down, and the big winners are your Microsofts and the massive conglomerates, right? So when you actually do that look, I want to come back to Clint on the UBI. What are people going to do? They're going to go out there and they're going to start playing golf, because when I started typing in the top 100, what started to come out were the first like 3 out of 5 searches were golf courses. And when I started to type in public, then it popped in the public golf courses in America. And the very the 8th or 9th result was the public stocks. So once we get that efficiency of time, how is that money going to be spent? And how can we invest in those components as well? And it's going to be a lot of leisure. It's going to be a lot of activity. Clothing, LVMH is probably going to benefit significantly. People are prepping for this. I'm not. If I can get down to only working 60 hours a week, and that'll be great.
Life is going to be very different. This is happening very quick.
The example I give to my parents is that before, so there was back in the Middle Ages, humans had to pick and plow land by hand, and then the plow was invented, and it basically just totally disintermediated the market. And suddenly, what required 1,000 workers only required a couple dozen. And you know what preceded that? The Renaissance. Artists, plays, writing, creativity. It's basically what happens is when you have a technological movement that turns a bunch of the labor class into the innovator class, it allows people to be creative. And I'm looking forward to that, especially with all the AI tools.
It's going to be awesome. I think life is going to be very cool. But as a father of 3 young children, I mean, I tell my wife constantly, I'm like, I have no idea how to prepare these kids for life, because I don't even know what it's going to look like in 10 years time. You know what I mean? It's like so much change is going to happen over the next 10 years with this AI stuff, where there's like biotech stuff, there's food engineering and 3D printing and humanoid robots. I mean, like, this stuff is all coming so fast, and it's going to be so different. UBI, it's going to be pretty awesome, but embrace the change. That's my parting thought. Sometimes people are resistant to change. You need to embrace the change, because there is going to be a lot of it, and it's going to come fast, and it will be like a tidal wave. So there's no avoiding it, right? So embrace the change, man. But
invest in all.
Exactly. Let's go. All right, cool. All right, let's go. All right, thanks, fellas. Let's end it there. Thank you, fellas. I appreciate it.
Embrace the change, guys.